They call it a simple fruit company. Bananas, pineapples, fresh produce stacked on supermarket shelves. But behind those bright yellow stickers lies one of the most powerful and most controversial agricultural empires in history. It began with a dreamer in Hawaii who turned pineapples into gold. It grew through corporate giants, and later, under the iron grip of a billionaire tycoon, it became a global force, reshaping not only markets, but also the lives of workers across continents. Today, it controls farms and fields stretching from Asia to Latin America. Its revenues cross billions. Its subsidiaries span the globe, yet its story is stained with lawsuits, pesticides, and human rights scandals that refuse to fade. This is not just the story of fruit. It's the story of empire and exploitation, of fortunes built and lives broken, of a company that fed the world while fighting for its own survival. From pineapples in Hawaii to boardrooms in Dublin and Hong Kong, from billion-dollar sales to billion-dollar controversies, this is the untold saga of James Dole and David H. Murdoch. It all begins with James Dole, born in Massachusetts in 1877. Trained in agriculture at Harvard, he sailed to Hawaii in 1899 with little more than ambition, borrowed money, and a daring idea. On a small parcel of land in Wahiawa, he planted pineapples and founded the Hawaiian Pineapple Company. Before the pineapples, there was politics. In 1887, a group of American businessmen pushed the Bayonet Constitution, stripping the Hawaiian monarchy of key powers.
Last week in Aloha Authentic, we learned of the close ties between Hawaii and Great Britain. Tonight, Kamakapili shares about the last constitution of the Hawaiian Kingdom.
In 1893, Sanford Ballard Dole, a lawyer and planter, and a distant cousin of James, helped depose Queen Liliuokalani and led a provisional government. The U.S. annexed Hawaii in 1898, and Sanford Dole became the first territorial governor. At first, the venture struggled, but in 1913, salvation came with the Jinaka machine, which could peel and core pineapples at industrial speed.
Oh, those are Jinaka machines, Pogue. It was named after Henry Jinaka, the engineer who invented it. The Jinaka machine is one of the most important things in the whole cannery.
What does it do, Mr. Checker?
Well, it removes the shell from the pineapple, cuts off both ends of the fruit, punches out the core, and leaves each fruit a golden cylinder.
Overnight, production exploded, and Dole transformed pineapples from an exotic delicacy into a household staple. Through the 1920s and 1930s, his company, now branded simply as Dole, spread across plantations, shipping fruit across oceans. By the 1940s, during World War II, the company's canned fruit fed US troops by the millions. When peace returned, Dole wasn't just a fruit company, it was part of American life. In the 1950s and 1960s, the empire expanded into bananas and tropical fruits, linking itself with the powerful Standard Fruit Company. Alongside rivals like Chiquita and Del Monte, Dole became one of the infamous banana empires, shaping trade in Latin America and often stirring controversy with labor and land disputes. A major shift came in 1961, when Castle & Cooke, one of Hawaii's Big Five trading firms, bought control of Dole. With shipping fleets, real estate, and financial strength, the new parent company gave Dole global reach. The once small pineapple venture had now become a diversified multinational. Then came David Howard Murdoch. Born in Ohio in 1923, the son of a traveling salesman, he had no college degree and spent time in the army during World War II. After the war, he started in real estate, building a fortune through bold and risky deals. In 1985, he acquired Castle & Cooke, and with it, Dole.
I left school when I was 14 years old and went to work. I spent 2.5 years in the Army and moved to Arizona, where I started building houses.
By 1991, Murdoch had fully consolidated his control. Headquarters moved to California, and the company was reborn as Dole Food Company, a leaner, more powerful multinational company built on bananas, pineapples, vegetables, and packaged produce. Though Sanford B. Dole engineered Hawaii's political turn, it was James Dole who turned pineapples into an industry, and together their legacies fused into one powerful name. In the early 1990s, Dole Food Company was riding high. After Murdoch's consolidation in the late 80s, bananas and pineapples were the crown jewels, while packaged salads and vegetables gave the company a foothold in US supermarkets. By 1991, Dole had become the world's largest producer of fruits and vegetables. But trouble brewed almost immediately. In 1992, plantation workers in Central America began filing lawsuits over DBCP, a pesticide linked to sterility. Though Dole argued the cases lacked legal basis, the accusations made headlines, especially as similar claims were raised against other banana giants like Chiquita and Del Monte. By the mid-1990s, Dole was diversifying further. It expanded into pre-packaged salads, one of the fastest-growing categories in US grocery stores. Reports from Nicaragua and Honduras described poor housing and dangerous working conditions for banana workers, fueling campaigns by labor unions and NGOs. In 1995, a new controversy hit when lawsuits surfaced in the United States, not only about pesticides, but also about alleged deceptive marketing practices tied to all-natural labeling. Dole spent millions defending itself in court, determined to protect the image of its iconic brand. The late 1990s were a double-edged sword. On one hand, Dole remained a supermarket titan. Its supply chain connected farms in Asia, Latin America, and the Philippines directly to North American and European shelves. On the other hand, its name became increasingly linked with the term Banana Republic economics. By 1999, financial strain began to show. Lawsuits, fluctuating commodity prices, and competition from Chiquita and Del Monte weighed heavily on Dole's balance sheets. In 2001, Dole was hit by another wave of lawsuits, this time tied to pesticide exposure and worker safety. Protest movements grew louder, particularly in Central America. That same year, Dole reported weaker earnings, blaming low banana prices and rising fuel costs. In 2002, the company attempted to stabilize its finances through aggressive restructuring, focusing on its most profitable segments: bananas, pineapples, and packaged salads. By 2003, Dole was stretched thin. Its revenues remained high, but the weight of litigation, protests, and fluctuating market prices kept the company under siege. The empire James Dole had planted in 1899 and Murdoch had reshaped a century later was now facing one of its most uncertain eras. Hamstrung by the legal and reputational crises of the previous decade, Dole's financial stability was looking increasingly uncertain by 2003. That year, billionaire David H. Murdoch, seeking to regain absolute control and shield the company from public market pressure. Between 2005 and 2007, the company tried to steady itself under private ownership. It invested in bananas, pineapples, and packaged salads, the pillars of its business. By 2009, after years away from public markets, Dole made its return to Wall Street. The company listed on the New York Stock Exchange, hoping to raise capital, reduce debt, and finance new growth. But the IPO disappointed. Shares underperformed, and investors questioned whether Dole could deliver long-term growth while still carrying the baggage of its legal battles. The years 2010 and 2011 saw further restructuring. Non-core assets were sold off, divisions were streamlined, and the company tried to sharpen its focus. But controversies refused to fade. Reports of pesticide use, unsafe labor conditions, and environmental damage on its Latin American plantations resurfaced in the media. In 2012, Dole made a dramatic move, selling its worldwide packaged foods and Asia fresh produce businesses to Japan's Itochu Corporation for nearly $1.7 billion. The deal reduced debt and allowed the company to refocus on bananas, pineapples, and North American operations. Then, in 2013, David H. Murdoch struck again. he launched a $1.6 billion deal to take Dole private for the second time in less than a decade. After the Itochu sale, Dole's stock price had dropped, and Murdoch seized the moment to buy back full control at what many considered a bargain. The move split opinion. By 2014, Murdoch, now in his 90s, was once again firmly in command. Dole was smaller than before, with fewer global assets, but it was leaner, more debt-heavy, and tightly controlled from the top. By 2014, David H. Murdoch had once again taken Dole private, regaining full control of a leaner, debt-heavy company. Now in his 90s, he stood as both the architect and the guardian of the fruit empire. In the mid-2000s, restructuring became the norm. Dole trimmed costs, refocused operations, and concentrated on its core products in its strongest markets. Yet despite the new corporate focus, Dole plc struggled to shake its legacy. The long shadow of the DBCP lawsuits, though often legally mitigated, meanwhile, critics highlighted another shadow. In 2012, just before the Itochu sale, Murdoch had quietly purchased 98% of the Hawaiian island of Lanai. The deal transformed the island's future. Tourism and luxury real estate replaced much of its agricultural base. By 2017, rumors of another IPO circled. Environmental and labor groups intensified campaigns against Dole, accusing it of greenwashing its sustainability efforts while continuing harmful practices on plantations in Latin America and Asia. The COVID-19 pandemic in 2020 exposed Dole's vulnerabilities. Lockdowns, shipping bottlenecks, and collapsing margins revealed just how fragile its global supply chain had become. Then, in 2021, came a new chapter. Dole merged with Total Produce of Ireland, creating Dole plc, the largest fresh produce company in the world. Headquartered in Dublin and publicly listed on both the New York and Dublin stock exchanges, but the new era brought new challenges. In 2021 and 2022, Dole faced scrutiny after issuing a voluntary recall of several packaged salad brands due to Listeria monocytogenes contamination. The recall spanned the United States and Canada, covering products sold under Dole, MarketSide, and other store labels. Although the company acted quickly and cooperated with regulators, the incident triggered lawsuits and renewed criticism over food safety standards within its vast production network. Its reach covers more than 30,000 hectares of plantations and over 250 processing and distribution facilities, a scale few competitors can match. In February 2023, Dole was hit by a cyber attack that forced a temporary shutdown of its North American production.
Dole had to temporarily shut down production plants in North America 2 weeks ago due to a cyber attack. A source says it was a ransomware attack. It's not known exactly how long production was halted. Ransomware attacks have been targeting the food and agriculture sector in the last 2 years.
And delayed shipments to major retailers. In 2024, the storm grew heavier. Inflation, rising energy costs, and shipping disruptions squeezed margins once again. Local competitors in major markets undercut prices, threatening Dole's dominance. Bananas and pineapples still formed its backbone, but the empire's grip no longer seemed unshakable. And now, in 2025, Dole plc stands at a crossroads. With more than 30,000 employees in 75 countries, it remains a giant in global agriculture. But the questions are louder than ever. Can it truly reinvent itself as a sustainable, ethical multinational? Or will its history of lawsuits, labor disputes, and controversial power plays continue to shadow its future? From the humble vision of James Drummond Dole in 1899 to the high-stakes boardroom battles of David H. Murdoch, and from the plantations of Latin America to the corporate towers of Dublin, this has never been just the story of fruit. It has been a saga of ambition and empire, of fortunes built and lives scarred. For over a century, Dole's yellow sticker has promised freshness on millions of supermarket shelves. But behind that promise lies a legacy of innovation and controversy, of global reach shadowed by lawsuits, protests, and uneasy truths. Now, as Dole plc enters 2025 with billions in revenue and operations in more than 75 countries, its future remains uncertain. Can the world's largest fresh produce company finally balance profit with sustainability? Or will its past continue to cast a shadow over every banana, every pineapple, and every deal struck in the name of growth? This is not just the story of a brand, it is the story of power, controversy, and survival. And it all began with a dream in Hawaii, a dream that grew into Dole plc, the empire behind the fruit.